Are you tired or feeling lost when you look at your financial reports? Do you dread tax season and wonder if you're overpaying or missing key deductions? Are you thinking about your future but have no clue where to start when it comes to building your wealth? If you nodded yes to any of these, you're in the right place. I have 3 financial experts here to break it all down for you. First, I've got Christina Springstead here, who's going to help talk about financial reports, what's important, and what you should be looking at. Then we're going to be diving into tax strategy with Jackie Coder, who is going to be talking about the biggest tax mistakes she sees business owners make and how to avoid them. And then finally, we're going to wrap it up with Mernie Mendoza, who's going to talk about how to prepare for your financial future without the overwhelm. So with that, here are some of my favorite moments from the chats that I had with all 3 of these amazing financial experts. Here you go. I am so excited today to be chatting with Christina, who has been one of my preferred vendors for years and years. We've recommended her and everything that she does because she is fabulous. So I love having her here. It's January. All of a sudden we're like, okay, we got to get into our books. We got these 1099s that got to come out soon, right? Like we got to get organized. I think that's one of the things that sneaks up on people a lot. I know it sneaks up on me because I tend to think like I have till April, right? Like I have till April to get everything sorted and done. But that's the very end of the process because with, 1099 deadline for the 1099 NEC at the end of January, it really behooves you to get organized as quickly as you can. So if you're watching this, that means you're probably already in the throes of it. If you're not watching this, it's probably because you're going to ignore it as long as you can. No shade. You're not here to defend yourself. So maybe you're watching this in April and you're like, oh, maybe I should have watched this in January. So give us kind of like, we're talking about understanding financial reports, right? So what would you say is like the most important thing? And I know that this is a loaded question, right? But where do people start? It's January. Where do people start when they're trying to get organized?
So I think the biggest thing is, do you have to submit your 1099s, right? Like that's the biggest thing is your P&L in order? And do you have all of your transactions that you've paid out to people that need a 1099? Do you have that in line? One, if you don't, and you need W-9s, gosh, start today, right? Actually start when you wrote the check, but if you haven't done that, start today because sometimes those are real hard to get. So I am finding, and I'm even closing out clients' books that we actually do the full service books for. And even though we do the books, things happen, and bookkeeping errors can happen. And one of the things I would recommend is really doing a dive into who did you pay. And I have found, Jamie, you and I talked about a P&L and a balance sheet, and there's tons of trainings on those, including Jamie's Financial Fitness Basics. Highly recommend it. That's where you can really go in and dive in and understand like both of those very common reports. But there are some supplemental reports, and I'm going to talk about QBO because we're a QBO firm, that really can help you dive in, because sometimes you'll be like, I feel like I paid this person. They're not showing up on the report correctly. I don't know what's going on. Do I 1099 or not? And although maybe you've never gotten caught for not 1099ing properly, if you ever did, the fines for not filing what you're supposed to are not pretty. And so there's an amazing report in QuickBooks called Expenses by Vendor Summary. And I have found this to be an amazing report. I run it for last year. I sort it by the amount spent. And then I look for everything 600 and above and go through and say, okay, what did I do with this person? Would they need a 1099? The other really important thing that I found is there's this pesky one called not specified that shows up in there that you want to dive into, because I have found, when you're data entering and then you accidentally put your expense to a customer or you make your vendor's name a customer, what happens is they don't show up. So they're not showing up on your 1099 report. We have found a ton, especially from other people helping them get their books together, where, maybe they spent money with Springstead Solutions, but they put me in as a customer. And now I'm not showing up on the 1099 report because I'm in this pesky not specified vendor. So I go and comb through that and have found ways to make corrections. So that then makes a game changer. So using other supplemental reports like that, again, sort it by the amount spent, dive into anything that is like an unknown vendor name, and check if there's one and there's a name for a person in there, that means they're a customer and not a vendor, and you can get that cleaned up. So I highly recommend diving into that. That was just a game changer to give me and my clients peace of mind that we knew everything was correct, and then we could dive in from there and then weed out those credit card payments, people, and then 1099 for what's left over.
Yeah. And I think that's exactly a great place to start. I think people, when we talk about understanding financial reports, I automatically go to your P&L and your balance sheet. But if you're using an accounting software and you go to the reporting section of that accounting software, there are a bajillion D reports, right?
Yes.
And sometimes it depends on how you put the information in, whether those reports are going to be accurate and useful, right?
Yep.
But go click around and see what's out there, because there's a lot more than you think. And so when we're reviewing, especially for the full year, I love the point on unspecified, right? The terms, this is the ex-auditor in me. If something is unspecified, if something is uncategorized, or if something is miscellaneous, I'm looking at it. Yep. Those are people always ask me, like, what do you look for when you're looking at your financial reports? And those are ones that stick out. And not only do they stick out to me, they stick out to the IRS. So those are important things to look at as well before we get into tax time.
Yeah. And you don't want those people sending you mail. You don't want to get their mail. And I love that you said the uncategorized, because that's a really important too. I do work with my clients and say, hey, if throughout the year you need to get your reconciliations done, you really need to understand, and you don't know, throw it into uncategorized, but it's a placeholder, people. It doesn't live there, right? And so eventually we've got to go out. And so now's the time to go into all those uncategories. The other one, Jamie, is undeposited funds. Yes. This is a huge one. And I think April's talked about this on a past live with you, but so much happens in there. And if you've got some random, really large balance in there, that's an indicator for me. You might have created double income in your books. And if you go file your taxes and your P&L is saying something, your income for that probably came through the bank feed and you put it through, but then you left the payment in the undeposited funds. So if there's anything in there, go in and see what it is and get that cleaned up too, because you could end up paying more taxes and you're not even really aware why.
And I would say too, when you're looking at like your P&L or your P&L detail, run it comparatively. So I always say, like, people ask, like, how do you look at this? How do you even make sense of it? And in a vacuum, like, there's probably not much you're going to garner from it. You might see something that looks weird that you can drill into. Yep. But when you have like a comparing period, like maybe it's, this year, like 2024 versus 2023, and you can see those trends. And that's where you can be like, well, actually, that doesn't jive with what I felt like happened in my business, right? Like, it's showing this, but that's not, that doesn't seem to jive. And so I find comparative reporting so much more useful. Now, that does require being consistent. So that's one of the things, right? If you're categorizing things one way one year and one way next, or even month to month, it's changing, it's gonna make it so it's harder to really make sense of your financials. So just, keep consistency in mind. If you need to reclassify some things, do that to make it make sense. But yeah, as you're looking at it, just start high level, start comparative, and then drill in, right? Just keep drilling and being like, what's going on behind this? Okay, what's under this, right?
Yeah, and QuickBooks they make it easy. You just click, if the number is hyperlinked, that's where you drill. You just click and it opens up. And I will add to that, Jamie, before you go and do your comparative, please make sure your bank feed is clear, right? If you've got 3 months of stuff in there and then you do a comparative and you're like, ooh, I saved a bunch, and then you don't have, that's an indicator as well. I have had a lot of clients I've come to work with, and they've had a bookkeeper, and they've been reconciled through the end of last month, but there's 300 transactions in the bank feed, and these are a little bit warning signs too. So to be looking for that, and then just to pair with your comparative, I also love the P&L percent of income or percent of revenue is great to see, like, why is my insurance 22% of the revenue I'm bringing in? This is every expense will tell you how much percent of what you brought in income. That's really helpful too.
And the beautiful thing is you're not just looking for errors, although you might find some, right?
Yep.
You're also getting actual useful insights into your business that you can use to make business decisions. So this is my little soapbox that I get up on, right? Which is like, you're the CFO of your own business. If you don't have one, it's you. You're the one making those decisions. And so if you're looking at your reports and making these observations, you can make changes. You can go be like, you know what? I need to go get some insurance quotes because this seems ridiculous, right? Like, you can take action steps from the things that you notice. So it's not just about like, is this clean for taxes? That's great. That's super important. But it is informing how you run your business. And once you get in the habit of that and realize how beneficial it is, and again, looking at some of these other reports, not just a P&L, but like other things that are helpful and insightful for you, for the type of business you have, then you can utilize that year round. And you might actually find yourself, maybe you only look at your finances once a year. Well, then all of a sudden you realize, actually, it's really useful to be keeping my bookkeeping up all year long.
Yeah.
Because I have access to real-time reports and real-time insights into my business. And now I also, bonus, don't have to scramble for taxes, right?
Exactly. Yes. And then you go to try to get help, and, we're all maxed out trying to help people with all the last minute stuff. One other helpful one that I love, Jamie, and you cover this in, I think, Financial Fitness Formula, is the sales by products and services. So if you invoice out of QuickBooks, and you do that, that is a really helpful report. And if you're not breaking down what you're selling by a product and service, totally worth looking into. QBO has some great free videos on how to utilize them, but that's a great one to see how many of this am I selling? What was the average price I sold it for? And maybe you're really passionate about something, but the sales are in the tank, and it's, do you pause it? Do you put more effort into it? So I love that report as well.
What's funny is I have decided we're actually splitting, this is a real-time kind of conversation, right? But when I was doing that work, and I keep up with it and I know what we sell, we have two main kind of sources of income in our business. We have our own digital products that we sell, and then we also have our affiliate income. Well, it used to be a small percentage, and now it's growing a lot. And so as we get sponsorship opportunities and things. So my goal for 2025 is I'm really splitting them into two very different divisions. I'm going to make sure that I'm, really being careful about expenses and how I categorize them. I'll probably use class tracking for it in QuickBooks, but there are different ways to do it in different accounting softwares. And just really figure out how profitable am I in each of these kind of different verticals, right? How because I think there are some insights to that I've already realized that taking forward, I'm like, man, this side is making less money, but it's way more profitable than this other side, right? And that gives you some ideas, some things to change, right? Maybe you're getting rid of a product. Maybe you're adding something. Maybe you're structuring things differently. That's the fun stuff. And the numbers help you make those decisions, right? Your CFO can help your CEO, which both of them are you, by the way, probably, but your CFO can help back up. Your CEO is trying to make decisions. What do we offer? What changes do we need to make? If you have the numbers to back it up from your CFO, i.e. the other side of you, right? It's going to make it a lot easier to make informed decisions that are going to actually get the results that you want.
Yeah. The other thing I think that's really helpful about what we're talking about here is looking at those reports. Is we all start our business with a passion for what we're doing, right? That's why we get into this and live the American dream of, working nonstop and 7 days a week and all the great stuff with this passion. Yes. And the numbers can come in and kind of be your logical counterpart, right? They're there for you to tell a story that maybe your heart isn't ready to hear, or your heart wasn't, it's something that you weren't even aware is wow, I did this just kind of for, it was just an extra bonus value add. But man, the numbers are speaking to me that this is what my people want. And it can just tell a different part of the story, because when we're running our business, sometimes emotions are so high that it's hard to really see what your business can be telling you. And that's why I love financials and what we do, is because the bookkeeping is really the foundation, the foundation of what you need. You need to be financially healthy to keep going. And it just tells you so much in so many different ways. And so once you embrace it, and at the end of the day, you do not have to be a numbers person. You say this all the time, Jamie, because the software does the numbers for you. You just need to understand where it needs to go and how the system works and where you're putting it.
Okay, so now that we've talked about why your financial reports are critical, let's get into taxes, because nobody wants to pay more taxes than they actually need to. Up next, I'm bringing on enrolled agent Jackie Coder, and she's going to talk about what your tax preparer really wants you to know. She's going to share how to avoid common tax pitfalls, what records you really need, and how to avoid costly mistakes. Taxes are on everybody's mind, Jackie, right? This is the time of year. We don't want to think about it, and now all of a sudden we got to think about it.
And I feel like everyone kind of was like, oh, it's actually a normal-ish year, so it's fine. Everything's fine. I could take a break. And then December comes around, it's like, oh no, it's coming up sooner than later. So we're all in the same boat. We're all kind of trying to figure the fact out that it's January 2025.
Yep. And it's, I can't even, my brain can't wrap my head around it. I don't know what has happened to time. I don't know, especially like the last couple of weeks, because we've been in weird limbo of like the Christmas, New Year's, and then my kids were out for a fake snow day yesterday. It's like, Lord knows what day it is, but y'all, it's almost tax time. So we are going to kind of shift the focus. So this talk, Jackie, tell people first, like what you do. You're my tax guru, but what do you do?
Yeah. So what we focus on at Coder Accounting is small business taxes and tax strategy. And then obviously with the small businesses, we deal with personal returns as well. So one of the common questions is, well, if you help us with a small business, can you help me with my personal? Yes, it's the whole package. And I really do believe that if you have a small business, no matter what type of entity you are, you should have the same preparer strategist focusing on both, because it's all intermingled, right? So separating them won't give you the maximum benefit. So just so you know, so we focus on small businesses along with their personal returns, and our main primary focus is strategy. That's what we love. We love helping the strategy portion and seeing people save money from that perspective. So when things come up, we're available, and someone, either myself or someone on my team, depending on what it is that you're looking for, will be directed to the correct person to help you and the price point to help you, right? Yes. So if you send us an email and say, like, I have questions about this and this and this, you might not need to meet with me. You might be meeting with my senior manager instead about different things. And then it's cheaper. So it's just, you just don't know. So we want to be there to support you, because also, again, we want to be that proactive strategy type of service provider. So if a small business owner has questions, they usually need to be answered now. They can't wait for 3 months, even if you are on retainer. And then, there's a whole different thing there. It's not always like a numbers question and we need to dive into your financials. It's literally like, I have to make decisions, because as we know, as small business owners, if you don't make the decision quick, it's gone.
Yes.
The opportunity is gone, right? That's entrepreneurship for you. You make a decision now.
Yeah, it's urgent. Yep.
It's urgent. So unless we're on vacation, which we were on vacation, we closed the auditing Christmas and New Year's for everybody to recoup until, we have them year round to have that strategy and hand holding. And it's not always necessary, but sometimes it is. But
and there's peace of mind associated with that, right? Just knowing that somebody is there if you need them. I think that's huge. Especially, again, small business owners, we're kind of winging it sometimes, right? Like when Jamie, you've been in business all the time. Yeah, let's
be honest.
Like, we're always winging it. We're all winging it, y'all, in at least some area.
Yes.
So, it's totally okay, right? It's totally okay to admit that. I love it. Okay. So one of the things I want to talk about, you mentioned strategy. So let's talk about preparation versus strategy. We are in Q1 of the year right now.
Right.
So what should people be focused on right now? And let's talk about that kind of delineation of when to talk about tax prep and organization and when we shift into strategy.
Okay. So right now it's January. Everyone's thinking, oh crap, we got to get my taxes done, right? It's time. So people come to us looking for new accountants now, looking for new tax preparers, want to save money on taxes. Now, there are things we can do. So we are still accepting new clients, a handful of clients, but there are things we could do to assist you for tax preparation and save you money on taxes. However, the real strategy comes throughout the year, and we have something called TaxStrategy tax planning meetings, which happen in October and November. So we look at your year-to-date activity, both business-wise and personal, because we all know things happen personally that affect our tax situation. I think that's hard for people to really grasp when you're in the thick of things, growing a business and just trying to be there day to day. Your personal changes affect your tax situation. So when we're planning a strategy meeting, yes, we're asking for your significant others, your spouses, year-to-date pay stubs, because it affects your strategy meeting. And we are asking if you had another kid, and we are asking if you moved or if you bought a property or or if you had an inheritance, it's like, why are we asking these questions? I need strategy. That's why, because it's the whole picture that we look at, not just the bottom line of your business. It affects everything. So those meetings happen for us. Everyone's different, but for us, it happens October, November, so we can look at the year and through the year and come up with those last few months of the year to really, one, have no surprises. So if things just kind of stay as planned, you know what you're going to owe tax-wise, adjust quarterly estimates, and put things into place, whether it's buying things, which is like the common joke, like I need to buy a truck, right? Like every single contractor that comes into the office goes, do I need to buy a truck this year? I'm like, I don't know. Do you need a truck? Like, it's like the thing, it's like, I need to buy a truck this year. So it's always so funny. So it's always like, there's more things you could do than buy a truck. If you need a truck, buy a truck. But there's so much you could do. So those last few months of the year give us that opportunity to sit down and think about and make decisions. Again, act, right? Like we have to act in those last few months to make those strategies and tax savings overall for your whole family. And sometimes it's literally your bank is sitting on $100,000 of cash, pulling it out. See, I know, Sarah, you did buy a truck. I know you needed a truck. But that, like, you might have sitting on cash that you could pull out tax free because you already pay taxes on it, and people don't understand that. It's like, now we have this chunk of cash to play with. Right. So either buy a property. Let's do a cost seg analysis. Oh, I could buy a property. Yes, you could buy a property and do a cost seg. Fund your retirement account. Buy the truck. Hire that employee. Send out employee bonuses that you're scared to send out, but it'll help you and your team. Different things that we can do, not only to save taxes this year, but look at long-term goals, because the lower taxes you put on your business, the less chances of you getting that loan that you need in 2 years. Yeah. Right. So it's not always just let's save money now. It's what do we do now for this year, and what are the goals moving forward that we can start baby step. Otherwise, we're just flying by the seat of our pants.
Yeah.
All the time. Not just half the time, all the time.
All the time. Yep. All the time. I love this, and I totally agree. I think that's kind of the mindset. Oftentimes it's like people will come in January, February, March, and they're like, how do I reduce my tax? My taxes due. And yes, like again, we want to make sure we're getting all the deductions and the credits and the things that you are due for. But a lot of the flexibility to make decisions, right, is gone. Accounting is one of those things, like we like hard deadlines. December 31st is a hard deadline for most things, right? It's like, did it happen on December 31st or January 1st? There might be a big difference. And that's why I talk a lot about this in my content towards the end of the year, because that's when you got to make decisions that are going to affect you in April, right? It's in that October, November, December. And so knowledge is power. If you have an accountant to meet with and talk about where you're at, what your goals are, what your tax liability is looking like. And to your point, Jackie, there is so much personal that affects it. I think people like to look at their business kind of siloed and think about like, well, how much of my business income should I put aside? Like, what should my tax rate be? Well, it depends. What's your tax rate on considering everything, right? As a pass-through entity, like you got to be thinking about all the things that you mentioned. What's your spouse doing? What kind of, did you have an inheritance? What's going on with your investments, right? What did you sell? Those types of things. It's all going to affect you. And so you need to be looking at that, not just in the beginning of the year, but like throughout the year, and especially as you get into the last quarter of the year.
Ask questions. Always ask the questions respectfully. Be kind. We're all doing our best, but ask the questions. And your accountant, tax professional should be willing to answer your questions.
Yes.
So, yeah.
And I love the respectfully too, because remember, it is tax time and they have a lot, hundreds, if not thousands of tax returns are what they're going through at this point in time, right? So that's just something to know. Have, some grace for your tax preparers and the communication aspect and how long it takes. But if you keep running into the same issue, and especially if this is happening, outside of a crunch time, then it might be time to look for maybe another one that communicates in the way that works for you. Right.
Right.
I think
And it's not always, and it's also people, okay, so going back into the like communication and transparency and answering questions, it might not be a good fit.
yes.
Right. So it's not necessarily, exactly. So it's not like, oh, someone needs to communicate better. Oh, I don't understand this. Oh, you need to, it might just not be a good fit. And that's okay. Whether it's us or someone else, it doesn't matter. It just might not be a good fit. And that's okay. It doesn't mean, just understand that we're all dealing with different types of people. We're all people. We all have different strengths and weaknesses and approaches, and we're all just doing our best.
Yep.
Business owners across the board, clients, professionals, service providers, it doesn't matter. So, yeah. So we're all just here to help each other. And
Yep. Yeah, and it's okay to switch if it's just not the right fit, right? I think some people hold on really long, maybe because they feel bad or they think it's going to be painful to switch. And in fact, when you find somebody who is a real human and that you have like a connection, you can talk to them. It's not, you're not like dreading when you see the meeting come up. Like maybe you're not excited to talk about taxes, but you're like, oh, Jackie, like it's going to be fine, right? Like I'm not worried I'm going to get judged. I'm not worried I'm going to walk away feeling bad about myself, right?
Right.
You want to find somebody that is a good fit for you. So
the meetings with any tax professionals are not, you shouldn't be looking forward to them. I mean, why would you be looking forward to like, let's do taxes?
Unless you're expecting a refund and you're just waiting to find out what it is, right? Then it's fine. Then it's fun. I might be in the like weird minority of like, not that I get excited. I do my own taxes still, mostly just to keep a pulse. Cause for me, it helps. Like I am a CPA. I want to keep a pulse on like what's going on out there, but I get even surprised by things. Like I realized this year, I just did a video on it. All of the new deductions that are available, not deductions, credits that are available for opening a retirement account. So like that, I'm a CPA. I didn't even know. And then I was like, oh my gosh, that's incredible. And I had opened a retirement account last year for my employees. So again, there are things like that your tax preparers are going to know about that you may not. And TurboTax, the way TurboTax works, right? It's going to present you with the most likely scenarios. And sometimes you have to do a little digging in order to look for ones that are, maybe less, like opening a retirement plan. That might not come up. They might not specifically ask me that. I might have to do a little clicking, right? I might have to do a little clicking to find that. And I would have missed thousands of dollars worth of credits that it's going to give me for this, right? I love this. Sarah, you're amazing.
Sarah's so fun. I love Sarah.
Surprised by this. She is the best. We love her so much. Anyway, this was great. I hope it gives some people some things to think about when it comes to taxes and just a bit of a different way to think about things, right? Like right now we're in that preparation. We're in the historian. Now we're playing historian and making sure we get all those, credits and deductions that are due to us. And then we can turn into strategists, right? And it's great if the same person can do both of those. If somebody can prepare your return, like Jackie, see where there's opportunity, and then help you implement that opportunity throughout the year. That's amazing. So I'm going to share your info. First of all, there is a link to a freebie, which y'all know I love a good freebie. So you can tell people about that. This is the 5 questions to ask before you hire a tax professional. So I just put it into the comments, so you should see it.
It's just when we do an intro chat, when we have someone schedule, it's like, what questions do you have? And they're like, I don't know even what to ask.
Yes.
So I know, Jamie, you have some stuff also available. I've had some clients come to us that were referred from you, and they're like, this is from Jamie's, what to ask. I'm like, these are great. Thank you for asking this and everything. And then I respond to them and they're like, oh, thank you for responding. So I just general, they're not very detailed or anything, but just something to start the conversation with someone, because I strongly believe you need to meet with multiple people and come up with who you work best with, that you have the best jive with,
And not only is it okay to ask questions, you should be asking questions, right? And that's how we prepare. I think, again, to your point, if we don't know what to ask, that's when later on we're like, oh man, I wish I had known X, Y, Z. And there are a lot of people that have negative experiences. And sometimes it's just a mismatch of expectations. And a lot of it too is just like making sure you're aligned on expectations and how the process works and, you know, what they're going to do for you, what they're not. That's where I see a lot of the friction coming up, right? And so I think that's really important, and making sure you're aligned on like big picture things, right?
Right.
Like if you are, and risk tolerance is one of those areas I always talk about. I'm like, if you are a fly by the seat of your pants, like ask for permission or ask for forgiveness instead of permission person, and you hire a like very, very like far, straight-laced accountant who says no to everything, and those exist, right?
Yeah. Oh, they exist. Yeah.
They're probably the majority of people, right? Because they're trying to cover themselves, but sometimes that they may leave some strategy that could be doable. But if you have completely different risk assessments, then that's not going to be a good match, and vice versa as well, right?
Right.
All right, so we've talked about how to track your money and how to save on taxes, but there's one more piece that is key to financial success, and that is planning for your future. Because let's be real, it's not just about financial security today, it is about setting yourself up for long-term success. And that's why I'm so excited to talk to Mernie Mendoza, who's a financial educator and is going to walk through the things that you need to do to set yourself up for success and to protect your assets and to build wealth into the future.
I am a financial professional. I am a certified financial educator. And so I've been in this field for more than 2 decades, going into my 24th year now. And the reason I decided to go with a certified financial educator designation is that I like to lead everything with education. And so although I do have all of these other licenses that allow me to do all kinds of great things for people financially, I tend to not talk about those as much. And so I do have multiple licenses in my field, which is why I can take a more holistic approach to things.
When people come to you, right? Like, how do you help them figure out? Because usually they're probably like, what do they say? Like, are they usually just like, I don't know if I'm doing this right? Or, what's kind of your first step with people when you get a new client?
Yeah, that's an excellent question. So as you mentioned, most people come to me and they say, I have all these accounts, but I have no idea how they work together. Like I have some retirement account here. Sometimes maybe they've had 2, 3, 4 different employers. So they may have previous employer plans, or, they made a little bit of money, so they open an account, or somebody says, oh, you should have this type of an account. So they'll open that. And so they have all of these different things out there, and it's typically all scattered, and they're scattered all over the place, and they're trying their best to keep it organized, but they just don't really have a way, or they've never had anybody look at everything. And as you mentioned, when they go to their tax professional, their job, and I say that, and I have a lot of tax professionals that agree with me on this, their job is to look at your current situation, typically for current tax year, or, for doing last year's taxes, but their job is to look at what you've made last year or this year to determine what's the best way to reduce your tax liability, because none of us, and if anybody says they love paying taxes, I don't know, there's something wrong with them, right? I like paying my, I guess what I feel like is unfair share of taxes, but I don't want to pay more taxes than I have to, right? That's why you become a business owner. So you do have additional tax benefits. And so their job is to figure out all of the strategies and all the ways that they can reduce your current tax liability. And so a lot of that means that we're going to put money in pre-tax accounts, which is great for right now. But their job is not to think about 20, 25, 30 years down the road when you're actually going to access all of that money, and that's how that's going to play into your overall financial picture. And so, and because I see this all the time with people that are now closer to that other side, when you're in the accumulation phase, you want to think about, what's happening right now. But when you're in the distribution phase, now we're in a place where we have to look at what do we pull from in retirement, what's the most, tax efficient way to do that, and also make sure that we don't run out of money once we are retired. And so, but on the back end, the more money we have coming out from taxable accounts, which what I mean is tax deferred accounts such as 401ks and IRAs, all of those things that saved us taxes, when we put the money in on the back end, that could hurt us, because the more we have from those, it determines how much we have to pay towards Medicare. It determines if part of our Social Security becomes taxable. And so there's all of these things. And not to mention, we have no control over the tax rates and what the tax brackets are going to look like in the future. So we may be in a 22% tax bracket now, but 30 years from now, maybe the minimum tax bracket is going to be 30%. And so this old-fashioned wisdom of you're going to be in a lower tax bracket and when you are retired may or may not be true, because we have no idea what tax rates are going to look like. And even though it doesn't feel like it, but we're still currently in historically low tax rate environment. And so there is a likelihood that taxes will go up at some point in the future. And so my job is to not only worry about today, like let's see how much we can set aside in a tax efficient manner today, but also how much can we set aside so that the future will have a little bit more of tax balance, so that 100% of your future income is not going to go, is not going to be subject to taxation. So these are the areas where it's different. And I do work hand in hand with CPAs all the time and tax preparers, because I don't do what they do. I can't advise you on how to file your taxes or what that's going to look like. But sometimes, business owners are told, go open either a SEP IRA or simple IRA or solo pay. And so they come to me and they're like, I see all of these acronyms, I hear these words, what the heck do they mean? And so my job is to explain, this is how the SEP works versus the simple versus the solo pay. And then, based on your situation, like you have 2 employees. So actually you're not even eligible for the solo pay. We need to look at these other options. But just being able to explain that in a way that's simple and easy to understand, I think is something that women look for, because we don't want to be mansplained. We don't want to feel like, that person is judging us for not knowing what we may not know. And so that's one of the things I actually hear a lot from the women I meet, especially through your group, is that they love working with a female financial professional. And we call it a judgment-free, guilt-free, shame-free zone. And this is where they can come as they are, no matter where they are right now. And together, we're going to get them to wherever they want to go.
It's funny that you mentioned the mansplain, and not to, I don't think all, male professionals are this way, but I have personally experienced when I purposely don't tell people what my background is. And so I have talked to people who are in kind of the financial planning professional, and just the way that I have been talked to in the past, I love to just then interject and show like, hey, actually, I know what I'm talking about, and just like bust all those preconceived notions, when I feel like I'm being patronized a little bit. So that's a little fun pastime of mine.
Well, my favorite is I'm with my husband, and like somebody, like a salesperson is trying to sell us something, and it's like, financial, they're asking about financial stuff. And they don't pick up on the fact that the whole time my husband's looking at me so that I can answer, because, I handle the financials in our family.
Exactly.
But the male salespeople, for some reason, don't pick up on that. So they have this whole conversation with him, and he was like, well, you should probably talk to my wife about this.
100%. And that's my favorite thing, is when they're continuing to look at him, and I'm like, hey, he has no idea. He doesn't know what's in our checking account right now. It would take him an hour to figure out how to access it. Okay.
Yeah. And I got to say, obviously there's some great men out there that are really great at what they do. Yes. It's just sometimes because of how they're trained and how, especially in the financial industry, it's just how it is. I mean, I still go to industry-wide conferences where they're like, oh, are you somebody's assistant? It's like, no, I probably am better at what you do. Than, it's just because you're a man and you see a woman, because I walked into rooms where there's maybe 5 women and there's hundreds of men. And it's interesting that people still have those preconceived notions about.
The financial world is still very male dominated. I was in the corporate world in finance, and often would be like the only woman at the boardroom, right? Like sitting at the table. And it just still is kind of an ingrained thing that we, need to break through. And some of that is we need more women in this profession, right? I think the more women we get in this profession, the better on the finance side of things. But yeah, I think that's a lot of the reason that we do what we do, because it's really not as hard as people think it is. And if we have the help that we need there, we can do amazing things. I'm a really big fan of women. Women in money do incredible things in the world. They just do. And they don't build rocket ships. Anyway.
Most people got so focused on creating, it's like all about the nest egg, like how much money, what's that lump sum I need to have to retire, that they forgot that lump sum really means nothing if you can't convert it to an income stream. So I think we're going back to this idea of, Jamie, I don't think you care if your portfolio was worth, let's say 10 million, but it only gave you 1,000 a month in income. You don't really care about that size of that. Like that 10 million makes no difference to you because it's only giving you $1,000 a month.
Yeah.
But what if you had a $500,000 portfolio that gave you 5,000 per month and it wasn't going to run out? You don't care about portfolio size necessarily. You care about your day-to-day expenses and that monthly income coming in. So I think we're going back to that where we're more concerned about not so much of like how big that nest egg is, but what is that nest egg going to give me? And based on what that produces for me, I can decide, because if I have this passive income of 5,000 or 10,000 a month coming in, then I may only have to work 2 days a week or work at my leisure, and I'm not stressed out about it. And guess what? When you're not stressed out about your work, it makes you want to do it more, right? They say if you want to, if you love what you do, you'll never work another day in your life. And I think that's so true. And a lot of times people are burned out from what they do because they have to do it, because otherwise the world will stop turning for them, right? But if it becomes optional and you can really go back to doing things because you truly love them instead of having to do them, because if you don't, the world falls apart, it's a very different feeling and you show up differently to work too.
That's the dream. I got chills. I just get total chills from that, because that's the dream, right? Like we want to make work optional. It's not that we're all like, I want to retire and then never, what would we do with our time? Or maybe we want to retire and like go do just our passion projects and not have to rely on that income. But I think that changed, because I was obsessive, right? Like I used to do all the retirement calculators and figure out like, how much do I need? And like, you're always trying to like determine, what do I need in this nest egg in order to feel, really, it's just like in order to feel comfortable, right? In order to feel like you can stop working. But like, am I really? Or am I just going to find ways to hopefully set up passive income streams? So I think that's another thing for business owners just to be focusing on is, how do I continue to take myself out while still making money? And like, how can I continue that into perpetuity, hopefully, such that like, I don't necessarily need a $10 million nest egg, even a $5 million nest egg necessarily, in order to live the life I want to live, right? Because I still have options. So that was like something I had to change about myself too.
Yeah. And I want to say, like, for women, like, and because when you're talking, it's just the word that came out was security, because we want security. I would say probably more so than men. And so, but there was finances, we hear the words financial independence and then there's financial security. And to me, they are two different things. Mm-hmm. Financial independence means that, you have, let's say those passive source of income where money's coming in. And basically, in order to be financially independent, you need to have more coming in than is going out. Mm-hmm. So if, $4,000 a month is going to cover all of your expenses and you have a source that brings in $4,000 a month without you having to work, guess what? You're financially independent. You don't need to have $100 million net worth to be considered financially independent. Now, financially secure is another thing, because what if there is an interruption to that income? Is then everything going to get flipped upside down? And the interruptions that I'm talking about, and unfortunately seeing more and more of these things with people in their 20s, 30s, 40s, and 50s, where maybe we weren't expecting it until later in life, it's major medical things. If you have a major medical thing that happens, and usually those things are unexpected, whether it's a really bad car accident or some accident of some sort, or again, some sort of cancer diagnoses or stroke or things like we, again, weren't expecting in younger people, that is becoming more common. Yeah. That is probably one of the biggest hurdles to financial security. So we can, and the reason I bring that up is, again, most people, like myself included, is like we think of financial independence of like this giant thing that needs to be there. But everybody's situation is different. I talk to people that can't live on $10,000 per month because their expenditures are above that. Yeah. And this is really interesting. When I do my questionnaires, the question is, how much money do you need to have coming in so that you can feel like you comfortably can live in retirement? And some people say, you know what, if I had $2,000 a month, like I'm good because I don't have a mortgage, I don't have kids, like I don't have these things. And some people are like, you know what, even $10,000 a month is not going to be enough for me. And so seeing these different perspectives it's really personalized things. Like it's not a one answer fits all. Your number is going to be different than mine, but I think we should all find what that number is for us. Like once we figure out, you know what, we only need $5,000 a month to live comfortably, then I don't have to go go through this, the rat race to chase this big number, because if I can figure out what's going to generate that $5,000 per month for me, for a lot of people, that's more attainable than these giant numbers that maybe you see thrown out there.
Yeah, exactly. It's so personalized. And I also think too, I love the calculation of like, how do I live off the interest, right? Like that, where you're not like, you figure out that number, right? Of How much do I need? And what if your investments covered that amount? That means that if you just put your money into something generating, I don't know, even if you go, if the stock market is too risky, maybe you're going to bonds, maybe it's 4%, whatever, right? And you're figuring out, okay, if I have this much money, or if I need this much money a month, and my investments are generating 4%, what would I need to have in order to just be able to live off the interest and leave the principal? And then you're truly financially free at that point, right? Like you're good to go, which I think is such a beautiful thing.
Do the same thing with your business. Like you can figure out in my business, if I don't want to actively do the work, I need to have this much. So if I have this business running and I pay X amount to have, let's say, 2 employees run that. So I also take out the overhead. But now without me being there, this business is bringing in this. We actually call that wealth equivalency. So for business owners, you can figure out either you need to have this pot of money to bring in this amount of income, or if you have a business that pays you this much, whether or not you're there, that's basically financial independence. It's running without you having to constantly be there to do the day-to-day. And so I think the thing that has also changed in the last decade or so is that there's more than one way to get there, with people doing stuff online and all sorts of different things, different ways that have come up for people to make money and to create businesses. There's really no one answer fits all. And you have to figure out, and sometimes it's multiple things, right? You might have a business, you may have some digital products that you create, like you may have multiple streams of income. And I think that's where people are going to. So with the Industrial Revolution, before that, people were self-sufficient. They were farmers. They were figuring out ways to sustain themselves. And then everybody got to work in factories and, everybody became dependent on a job. I feel like we're now going back to self-reliance, where we have more entrepreneurs than ever before, or people that want to be. That's why so many people who have a job always also have a side hustle. And I think that's a great thing. Like, I feel like entrepreneurship is back. And I feel because of, obviously, now we have the technological revolution and there's so many other things. I think of all the things we have today that I wish we had 20 years ago. My business would look completely different if I had the tools and resources that I have now available to me 20 years ago when I was first getting started. So I think it's also a really exciting time and good time to be in business. If you're starting, it's a great time to start a business. If you have been around for a while, it's also a good time to look at what can I change about this to completely change my financial outlook as well.
So I loved every bit of these conversations with these 3 amazing powerhouse women. I love talking about money with experts and people who know what they're talking about. So thank you so much to Christina, Jackie, and Mernie for coming on and having these really important conversations about making money and what to do with it. If you found this video helpful, please make sure to like and subscribe. It helps to support this channel and helps us to have more amazing conversations just like these. And if you're ready to take the next step, I have put the links to Christina, Jackie, and Mernie down below if you want to contact them and work with them directly. They are amazing resources. And then I want you to let me know in the comments, what's one action step you're taking away from this conversation that you are going to do? Thanks for tuning in, and I'll see you next time.